Welcome. We're back. About to be starting a new week. Hope everybody had a good weekend. I spent my weekend watching Billions and doing probably 6 one-on-one classes. It was a good time. Hopefully you did something relaxing, a little bit, distracting from the very, very volatile market. But it's about that time of the week again, where the market's soon to open within about 12 hours. And futures are pretty much flat right now. Up a little bit. They were up a lot more before. If we really go into the 5-minute on the S&P futures, basically what happened is they gapped up, started off very, very nicely. Then they came down to fill the gap, and now they're just kind of maybe double bottoming. I'm not too sure. It's the 5-minute, doesn't really matter too much, but they're up a little bit. And yeah. So over the weekend, I believe the Senate passed the new stimulus proposal, and then I think I was just reading an article from CNBC. Apparently Biden is going to be having it on his desk by the 14th. I'm not too sure. Please correct me if I'm wrong. Remember, I'm not a news source, but trying my best. And yeah, it's going to be very interesting to see how this affects the markets. There's so many different potential ways in which this can turn out, and it's probably going to turn out in both ways. Like literally every single day, prices go up and down, and that's what's going to happen. Pretty obviously, but you also want to remember that that's happening a lot more than normal. Now, what do I mean by that? We're in the Wild West. The market is pretty volatile right now. You were getting much bigger swings on the indexes. And you already have been for the last year, but you really are in the last couple of weeks compared to anything that's close to normal in the market. And before I even really start talking about technicals and stuff, a lot of people here had a big wake-up call in the last couple of weeks, and you need to realize something. You need to realize who you are, right? Most people, and this is just, I guess, statistically, you can search it up, most people who trade fail, especially new people to trading. So you need to understand that if you're going to be in this market and you're going to be trading this market, you better know what you're doing, right? And like these are the times where you need to be learning, you need to be heightening your skills, and you need to be prepared. You cannot just walk into a market like this, doing whatever you want and just going crazy, because most investors are successful because all they have to do is wait, right? You just get an index and you wait for 20 years. Pretty much everybody who's done that since the stock market started has made a good amount of money. But for other people who are traders, swing traders, day traders, there's going to be a lot more focus. There's a lot more skill involved rather than just patience, right? And you're going to need that skill when the market's looking like this. So I'm going to try my best to supply whatever education I can, recap some trades, give my thoughts on the indexes, and then look for some potential new trades. Yeah, that's just... it really is time right now for you to be trading at your highest potential. This is not a time to be just throwing money wherever the hype is. It's time to be smart, tactical, and not only just play the side of trying to make as much money as possible, but focusing more on how to lose as little money as possible. So in times like these, risk management is a lot of the time more important than technicals and fundamentals. Because if the market is panic selling, people stop caring about technicals and fundamentals. They just care about the capital in their account. They want to preserve that capital. So you need to realize that. You need to be prepared. And that's why we're here on a Sunday night, trying to prepare for the week. So yeah, I got a new stream overlay. We'll see how it works out. Hopefully you can see the chart a little bit better on this one. On the previous stream overlay, the chart was kind of like squeezed and you couldn't even really see the prices. So hopefully you can kind of see the prices on the right scale right now. But yeah, these are futures up a little bit. Let's look at Bitcoin really quickly. I put out the trade on Bitcoin. It was a little bit interesting. It was an advanced trade for more experienced traders where you're going to be putting in an entry position right when I posted it. And when I posted, Bitcoin was at 45.3K. But I also said the aim for here was to be cost averaging, because I was thinking it could go a little bit lower before it went higher, but there was just too much demand, you know, for Bitcoin, and it just started going. And right now the trade, since I posted the alert, is up 13%. So earlier today, in the Discord, I actually gave everybody a second and third target for the Bitcoin trade. Again, this is not an alert to enter right here. This is really just for the people who are already in, the people who are already up 13%. Since if you break this target, you could easily retest your previous all-time high, which would be the second target. And if you break your previous all-time high, the third target I put was the 1272 Fibonacci extension. You anchor from this high over here to this low over there. But again, you know, that's just if it does go to the upside, because on the daily on Bitcoin, hidden bullish divergence is almost nearly confirmed. So a major time scale is looking good, and a lot of the times even this was hidden bullish divergence. Right over here you had hidden bullish divergence, and it brought you from since it confirmed, it got you from $36,000 to pretty much all-time highs at 58K. So now you're showing that same exact signal again on Bitcoin on the daily. And stimulus really helped out Bitcoin the last time around. A lot of people just threw their stimulus checks into Bitcoin. So now stimulus again, will that help Bitcoin? We shall see. Yeah, that's just Bitcoin. I want to cover that. We'll talk about the markets in a second here, and the indexes and what I'm looking for, because a lot of the times, and for the people who don't care about the indexes, you're wrong. You need to care about the indexes because they represent those stocks that you're trading, right? The indexes are going to simplify everything for you. Otherwise, have fun looking at 500 different stocks to get a read on the market. You need to start caring about the indexes, the technicals on them, because they really, really work out. For example, on Friday, I called the low of the day. I technically, and I hate saying I called things, it's just so arrogant, but I was signaling a potential area where the market could bounce in the Discord and on Twitter using technicals on the S&P 500. And that led to the biggest intraday bounce the stock market has seen since, obviously not ever, but like in a while. And, you know, maybe in a few months, whatever it was. And stocks really, really bounced in the afternoon after hitting this demand line, which was also near horizontal support. And then I was actually in a one-on-one class this weekend, and I realized you're actually showing some hidden bullish divergence on the daily as well. So we'll see how that plays out. But in terms of the actual S&P 500 index, I think as long as you're over 3723, you're good. And I don't even think your bull run is like in jeopardy unless you fall under 3585 on the S&P 500, which was your swing high over here in September. And then I don't even, you know, for a long-term bull run, I think you need to fall under 3,400, which was pretty much the highest point before the COVID crash. So to end the short-term bull run, I think you need to fall under 3723. To end the midterm bull run, I think you need to fall under 3,600. And to end the long-term bull run, I think you need to fall under 3,400 on the S&P. But yeah, hopefully that alert on Friday helped a lot of people out. When I did put out that alert, I'm sure most of us, including myself, were down a lot on Friday morning as the market literally dumped. But it pretty much recovered every single level that it dumped from on Thursday and on Friday in the afternoon on Friday. So hopefully that alert helped. Just learn your technicals. This was not hard at all. This was pretty easy on this chart. But at the same time, when I put out that alert on the market, I wasn't looking at only S&P. I was looking at the QQQ, which was back testing this resistance as a support, which it bounced. I was looking at the NASDAQ, which did, when I was alerting that potential bounce time, that's a weird way to say it, but when I was alerting it, you were actually under this support, but you were kind of filling this mini gap you had over here, so it was fine. And then even when I was looking at it, the 10 years were finally falling intraday, which has been a big reason for this market volatility. So yeah, keep all that in mind. You know, I was looking at all those factors. I was also looking at stimulus this weekend, where there was a high likelihood the Senate, well, not high likelihood, but there was a high likelihood that something would occur in terms of getting something out, which did happen. I believe what needed to happen, or what did happen, was all the Democrats voted yes, and then all the Republicans voted no, but it was like the 51 to 49 majority. from the article I read like 20 minutes ago. I can be completely wrong. So again, I don't care if I'm wrong. Just fact check me. Let me know. I'm not weird about that stuff. I'll be wrong any day of the week. So yeah, that's my thoughts on the market. Those are levels I'm looking to hold on the S&P 500. And then I think your resistance on the S&P 500 would be 3873. If you break 3873, I think you're going to go to a new all-time high on the S&P 500. But yeah, that's my thoughts on the market, and why I spent 5-10 minutes on that was because it's more important than a lot of individual stocks. Because if the indexes are dumping, it represents the stocks, and they're kind of going to ripple together. I'm sure if you look at the 1 hour chart on the very, very volatile days, a lot of stocks literally just follow what the indexes are doing. And even on Friday, like literally 70% of stocks put in a bullish hammer candle on the 4 hour, because that's what, if we go to the 4 hour, it's pretty much what happened over here on this candle. So you had a lot of bullish pin bars. It's all over the place. I mean, I can look through so many different things. Clover, CCIV, pretty much like so many different things. TN, I'm just going through my watch list. Every single one of them has a bullish hammer, a bullish pin bar candle, and pretty much majority of stocks do from what happened on Friday. So all of these have bullish pin bar candles pretty much, and I'm just going one by one on my watch list. And we're gonna get to all these stocks. But yeah, that's the intro for the stream. I know when the market's like this, certain people are not going to be around in the stream because all they care about is the good days and making money and the euphoria. But for the people who are here tonight, you are the real traders. You are the people putting in the work, and you're the ones that are going to last through this volatility. You know, if this is like, and I saw Stock Lizard King on Twitter tweeting this. This is pretty much literally the worst time to give up just because you're down, whatever. This is the time that you need to be smart, and this time you need to be improving your skills. So, like, if you want to be a trader, if you seriously want to take this more than just 1 year of a bull market, and you want to do this when it's a neutral market or a bear market, you need to be in. I mean, I'm not saying you need to be in capital wise, but I'm saying you need to be game. Like, no matter what the market is doing, you can't just leave forever because of a couple bad weeks. And if a couple bad weeks wiped out your whole entire year of gains or whatever it was, you need to start trading better. I'm not going to sit here and sugarcoat it. I'm here to be straightforward with you. I myself have a lot of improvement to do. I was definitely overexposed before the last couple of weeks just because January was my biggest month ever. February not so much, and like the beginning of last week not so much. But yeah, just keep all those things in mind. Let's go talk about some specific stocks, some ongoing trades. Let's start with covering last week. But before I get into that, we're slacking on the likes tonight. Gonna need some more likes on the stream. If you support what I'm doing, hit that like button. If you want to subscribe, we could probably hit 2,300 subscribers either tonight or tomorrow night. We're currently at 2294, so we need 6 people out of the 55 people here to hit that subscribe button to get us to 2,300 subscribers, which would be awesome to hit it on stream. And if you want to send me a tip or get some merchandise, that's the pinned comment in the chat. I hope the tip page is working right now. I sent like 4 tickets to Streamlabs over the weekend because it was glitching out. So I just checked it right before the stream, and I believe that the tips are working again. It just wasn't accepting credit cards, but it should be now. Regardless, PayPal has been working. But yeah, if you want to send me a tip or get some merchandise, that's the pinned comment in the chat and the first link in the description. It'll pop up on the stream. And yeah, let's go talk about some specific stocks. How the sheet looks going into the week, how the sheet looked last week. And then I have 5 new stocks that are on my watch list going into this week. And if you're in the Discord, you already saw them, but I'll explain the reasons behind those. So let's go over here. All right. This is how the sheet looks going into the week. Again, every single week, I carry over the ongoing trades from the previous week to start off the week because they're swing trades, and most of them take a couple or a few weeks to play out. So I have to do that. Again, and a lot of people were having some questions about it, but the reason for the sheet is not for me to show off or whatever. The reason for the sheet is just so I can track the results of all the trades, keep everything clean and consistent for everybody to just to see what's going on. So a lot of the times, you know, the ongoing trades going from the week could be a couple weeks old, it could be a day old, but it just depends on how they finish out. They're swing trades, they're not day trades. I don't care what the day-to-day result is, I care what the eventual result of the swing trade is. But this is a sheet going into the week. FEYE and Big Commerce are down going into the week, but I'm just leaving them on the sheet because they still have a chance, especially if the market does bounce. And then Fisker, Apple, and ATRA are kind of even, and then the rest are in profit. Sundial is up 16%. I alerted Sundial on Friday afternoon. Clover is up 11% since the first PCZ. It's up like 20% since the second PCZ. So whichever PCC you entered at, you could be up or less. You could be up higher, like 20+% off if you got in on the second PCZ I showed, or you can only be up 11% if you got in at the first PCZ at $7. And then Bitcoin actually need to fix this. It's up 13% right now. CCIV up 8%, QS, Palantir just up a little bit. And the ones with the asterisks, really, I put it over here. That means they got stop hunted on Friday morning when the whole entire market was falling. Just go back over here. As you probably have heard me say a lot of times, you need a lot of the time you need to wait, especially during market volatility, for candles to close to get confirmation if you should be stopping out or not, because this happens very, very frequently when you have intraday volatility, where you break under your support and your stop loss, but you don't close the candle there, and then you come all the way back up to close your candle, and you have a hammer candle or bullish pin bar. So all the ones that have the asterisks on the sheet, it means pretty much they fell under that stop loss area, but they closed their candles above, and they actually made it a good thing by showing bullish hammers and bullish pin bars, which kind of even strengthens the argument of a lot of these trades. But of course, I'm sure many people with physical stop orders set up would have been stopped out. And of course, you could always just re-enter around the same exact price, even if you do get stopped out. But apologies, I can't control the market pretty much dumping on Friday morning. If I could, I shouldn't be talking like that, but I wish I could, but nobody can, at least legally. And yeah, so that's just why they have the asterisks, because the trades still look good and they're still holding support on the candle closes. Somebody just asked which candle confirmation. Thank you for asking, great question. I go by the 4 hour, that's my preferred candle. You can even go by the 1 hour, but a lot of the times you might close a 1 hour candle under and still come back over. That's why I just prefer the 4 hours. Very consistent. We pretty much have 2 4-hour candles every single day, first half of the day and the second half, just to track how the morning was and then how the afternoon was, right? Or even the daily candle. If you're more of a long-term swing trader, then the daily candle can help out the most. But yeah, that's just kind of to be, full transparency on the ones with the asterisks. They were technically stopped out, but I even said on Friday in the afternoon that I'm keeping them on the sheet because they still look good and they were still around the areas when I did alert that. Not only on the Discord, but I also tweeted it out, so I tried my best there. Just a very rare scenario of what happened on Friday morning. But yeah. Somebody asked, is that True Trading Group on your TV earlier? I saw, who was that? I think it was Matey. Yeah, that is True Trading Group. I've been watching them for a couple months now. That's actually where I got the motivation to give that little speech in the beginning of the stream about if you're a trader, you better put in the work, because he was literally just talking about that, not gonna lie. But hope it made a point. Haven't read the chat yet. Someone, Met says, like the new layout, thank you. My weekend was good, friggin' cards. Yeah, need to talk about risk management a lot more than technicals in times like these, for sure. Let's see what else is in the chat. Yeah, I hope the Bears can play nice this week. 1,600 members in the Discord, let's go. If you're not in the Discord, join the Discord. That's where you can get intraday updates on all of the trades. Where you can talk to 1,600 other traders and just a bunch of more resources. PCZ is a pattern completion zone. We'll go over that when we look at Clover. You are such a smart guy. I'm honestly not that smart. I just learn efficiently. How do I put it? I've just spent a lot of time into this craft. Like, I wasn't super smart. I just put in the time that it required to learn these things. Yeah, that pretty much covers that. 4-hour candle seemed like a long time. Can it drop even more? Sure, that's what you're putting on the table. So it just depends on your preference. If you can't handle, being down another 4 or 5%, waiting for the candle to close, and you want to cut your losses, absolutely. Sometimes it'll save you because it'll just keep dropping. Sometimes you're gonna get screwed over, like what happened on Friday. So what you want to do in that scenario is look at how the indexes look, right? Are the indexes still under your support, or are they bouncing back up, right? Compared to the indexes. Risk is pretty much up to you. What risk do you usually do? Risk depends on 2 different things. It depends on, 1, your risk tolerance amount, which is what you were talking about, but it also depends on your support. You don't want to be entering a trade when you're 15% above support, because then you could literally go down 15% just to bounce. So you want to be entering every single trade next to a support. These are all the things that kind of talk about in one-on-one classes. What's your opinion on Fisker these days? Is Fisker pump and dump? Fisker is my favorite stock long term. Short term kind of looked like a pump and dump, sure, but I think the major reason for that was the market. And regardless, I don't really care too much because the entry of the last major trade on Fisker was 15 bucks. It's still well above that, and it already hit the target. It's still above the target. I think no, it's below the target. Never mind. But it went like 10 bucks above the target. It went crazy, which is awesome. Super happy about what Fisker did. No matter what happens in the next month or 2 months, Fisker is still my favorite long-term hold for the next decade. That's my favorite investment, and that's my opinion. If you disagree, completely fine. And I definitely can be wrong. Nothing's ever 100% certain. Yeah, biggest Fisker bull. Have like 3 videos out on them. So yeah, hopefully that was a good answer for a lot of the questions in the chat. For sure. I mean, don't trust me. I'm just being honest and giving you my opinion. I mean, if you choose to trust me, that's your choice, but I'm not even telling you to trust me. You always trust yourself more than anybody else. And I'm saying that about myself. Trust you more than you trust me, right? You always want to trust yourself as a trader. The second the market starts doing things like this and you lose faith in yourself as a trader is when you fail. So you cannot lose trust in yourself as a trader. That's the one thing you can never let go of when you're trading. Even if you're wrong, you cannot lose your confidence as a trader, because it's going to mess you up in the future if you're not trading confidently. Who cares if you're wrong? Everybody's wrong. There's not one trader who's never been wrong unless they only put on one trade and they were right? For people who trade day in and day out, it's inevitable that you're going to be wrong at some point. So yeah, I hate how people put so much focus on being wrong. People need to start putting more focus on managing risk. That's what shows your skill. Conserving capital even when you're wrong. Not losing, all of your gains in the past year in a few weeks, right? That, all the people were feeling like they're on top of the world, sharing the results on Twitter. I mean, another thing, like the hype on social media, boom, gone. In 3 weeks, people were so euphoric on social media, especially Twitter. And in the last 3 weeks, it's just turned into a very dark place like the amount of arguments I've been seeing on social media, like toxicity that comes from these types of moves. Like for the last 3 months, I've barely got any hate, and then last week just so much about the stupidest things ever. It's a weird times, like literally in the thumbnail of the stream and in the title, we're in the wild west of trading, so better learn how to survive, right? Yeah, that covers all the trades. Let's actually get to some charts now. I haven't spent too much time looking through individual stocks. Make sure to hit that like button. Let's get to 50 likes. Hit that subscribe button. If you want to send me a tip or get some merchandise, that's the pinned comment in the chat and the first link in the description. And yeah, let's talk about some trades. Start off with Clover. Had a huge move off of the second PCZ. Again, when I put out this trade, there was 2 PCZs. If you read the description of the trade, like I said, the first PCZ was at 705, right over here, which was your 2618 from B to D, and then the second PCZ was 635, which was your 1618 from X to D, and that was essentially your bottom, give or take a few cents. So when Clover was at 733, I said that the 2 PCZs were 705 and 635, and it was just flip a coin which one will be the actual reversal PCZ. Potentially, it's not even confirmed yet. And so far for now, unless it just drops again, trust issues, yep, on Clover. So far for now, you did bounce off of your secondary PCZ at the 1618 from X to D. In terms of Clover, let me bring back my MACD. Go on the 4 hour. You have triple classic bullish divergence potential. You definitely need your MACD to develop more. You only have one waning level of negative momentum. You need a few more for more confirmation. You do have a bullish pin bar off of the PCZ, but most of the market had a bullish pin bar on Friday afternoon. I don't care. It still looks good. As long as you're above 635 on Clover, you're good. You could even, like literally, and this happens this is what happened on UWMC, right? If you remember the trade from last week, UWMC was a 51% profit in like 5 days. That trade, it bounced off the PCZ, it faked out a lot of people, and then it came right back down to double bottom. It's very, very common to double bottom at a pattern completion zone to really confirm it, not once, but twice, and then take off. So you'd head right back down, especially if the market's volatile, but as long as you can hold above 635 in that general area, you're good. As I said, it's a higher risk, and this is for experienced traders. You really want to be conservative with how you're entering the trade just because of the actual trend. You're not making higher highs and higher lows yet. You don't have a confirmed trend reversal. You're not at a 23.6% retrace. So even from a Fibonacci standpoint, you're not going to be technically confirming a swing low until like 880. So there's a bunch of different things you need to do, and then at the end of the day, the float is still comprised of many bag holders on Clover, which means on a lot of bounces they're going to be trying to minimize their losses, which does show some, it probably will show a decent amount of turbulence compared to the UWMC trade, because that one also had a lot of hype behind it. I don't know if Clover is going to get hyped this week, but technicals, they're nice as long as you can hold 635, and you could even squeeze on Clover. You do have enough short interest. I believe it's like 22 or 23% the last time I checked, which should be enough to squeeze if you get that momentum, but who knows, it's all probability. So get CCIV. This trade is currently up. Let me delete that. Since the entry, the CCIV trade is up 7 or 8%. This is I think the third or fourth trade I put on CCIV. The first one, really what happened, it was right over here. The entry was, I believe, around like 29-ish. Actually, no, it was like lower because it was up 18%. It was around 27.50. And basically what happened on this trade is not once, which was on this candle, not 2 times, which was on this candle, not 3 times. Well, actually, yes, 3 times. This CCIV trade I put out before was up 18% in profit. It just could not break 32.50, which was on the chart when I put out the trade, I hope so. Unless it was created after. But then eventually I realized that this was turning into a bear flag. And when it came down over here and the trade was still up 10%, I alerted the Discord that there was a bear flag and to take caution if it breaks to the downside. The bear flag broke to the downside and we pretty much dumped again. Even tried to do like a little scalp right there. It was a 3% loss. So it just depends on how you played it, if you followed the alert or if you were just following it like on paper. But then this trade is again up 8%, so that could at least clear out the losses from there if you wanted to break even. But regardless, it did show nice gains over here. And again, it's also up again. I don't know if it's going to hit the target, but thing just went from what, 65 down to 20 bucks pretty much. And now you're showing classic bullish divergence. Hopefully you can get it. You can't really get it on the 4-hour like textbook divergence, but you can get local divergence. Let's see what happens. TNK has a lot going for it. I think I put this out on Friday as well. If you want to see the indicators I use, go to the free course on my channel. Just go to playlists and then go to the video called technical analysis example / walkthrough. In the beginning of that video, I show what's it called, the indicators that I use. And then I also have another video in that course called how to manage risk and set up TradingView. Somebody just asked what site do I use for charting. It's TradingView. If you want to see how to set this up and how to manage your risk, I have a video. If you go to playlists on my channel, then you go to my free trading course, it literally says how to manage risk and set up TradingView. So TNK, bull flag, hidden bullish divergence on the 4-hour, almost confirmed. Hidden bull, not on the daily, never mind about that. Delete that. But on the daily, look at this. Your major resistance point of 1242, it was your support here, then your resistance over here, and your resistance over here. That actually became your support on February 26th. Now you're showing classic hidden bullish divergence and a bull flag, and you're over the 200-day moving average. A lot of good technical things on this chart. Trades up like 1.5% or whatever. We'll see if it plays out. It's trying to actually break out of this bull flag right now. So we'll see. Entry is not super optimal, but it's showing demand. Apple, it bounced pretty much off the bottom of this demand line. Trades that break even. And now Apple is showing classic bullish divergence. Nice. If the market holds up this week, I'm pretty bullish on Apple. No divergence on the daily though, but you're at a horizontal support, you're at a demand line support, and you're showing classic bullish divergence on the MACD and kind of on the RSI, just very locally. But again, it's super correlated to the market, and futures are currently falling. They just fell about 0.1%. So it depends on the market sundial. Put out this trade on Friday afternoon. Trade's already up 16% within a couple hours. Hidden bullish divergence on the daily is not even confirmed yet. Whenever you want to take profits on this one, just go for it. If you want to continue holding it, go for it. If you want to sell right here, go for it. If you want to go for the target, go for it. Whatever you want to do, the trade's up 16%. And a lot of the times on these, especially lately, a lot of these trades are going up double-digit percentages, and then they're not getting all the way to the target because the thesis is correct and they are working as I thought they could. But what happens is they're getting towards those targets, and then the market just randomly in the morning drops 3% on the Nasdaq. What? So what I would say on a lot of these trades that are already up double-digit percentages that I've put out, even if they're not at the target, what I would say is put a stop loss in profits. So that even if the market does have a very random, which is not actually random anymore, if the market has another common, regular, scheduled pullback during the day, you're not going to be letting a trade that's up, 15% go all the way back down to the stop loss. So again, from here on out, because that's been an issue in the last couple of weeks, any trade that goes up over 10%, if it comes back down to the entry, I'm canceling out the trade. The idea there is just to break even on it, because you should never let a winning trade turn into a losing one. And even before it comes all the way back down to the entry, you should still be taking profits if you see that it's heading back down there. So please keep all that in mind. I'm saying it again, and I've been saying it for a while. From now on, that's also going to be reflected on the sheet. If a trade goes up over 10%, comes back down to the entry, I'm just going to put like a gray box, because it worked out at first, but then whatever happened didn't pull back to the entry. US, another one, a lot of them just pretty much got stop hunted. There's nothing you can do when the market fell as much as it did on Friday morning. But again, the market showed demand where you wanted to see demand, and then that was alerted in the Discord, and most of the trades had a very huge bounce in the afternoon. And the QS trade is now up 6% after getting stop hunted. But the thesis still holds, and how you actually have a bullish hammer, kind of, not really. It's weird. It's very weird candle here, but you have a signal alongside everything else, which is now you're waning just a little bit on the MACD for some potential classic bullish divergence on the 4-hour. And you kind of bottomed off of this low aside from the scam wick during the market falling. FEYE, another one that got stop hunted, but it's showing triple classic bullish divergence now. And you're kind of holding this demand line. However, I really think you need to get back above $19.13, because we just go on the daily. That was your resistance over here, over here. So you want that to be your support. You don't want that to be your resistance again. So you definitely want to rally over it. You even have some hidden bullish divergence on the daily. You have a hammer candle. I wish the entry was right here, but unfortunately the market took it down here. So it's hanging on. ATRA, just yet another one that got stop hunted, but that stop hunt actually turned into a bullish hammer candle and classic bullish divergence. So it's actually looking a little bit better, assuming the market does not fall again, which there's a decent chance it does. So it's just very, very weird. That's why you really want to be scaling into these trades conservatively compared to putting your whole entire entry in at the entry price. You want to be scaling into it so that when those funny things happen, you can get a lower average cost. So you're showing some classic bullish divergence on the daily on Atara. And on the 4-hour, you're showing triple classic bullish divergence. You're still technically right above $16, which was your resistance on these two highs, and your resistance over here in 2019. And you're right over the 200-day moving average. This is a beautiful chart if you're using indicators. I just wish that you could continue to hold above the support. Honestly, if you want to lower this stop loss, I would say go for it if you're comfortable. You know what? I'm lowering the stop loss. I'm going to alert the Discord later tonight. Lowering the stop loss right here because it's kind of showing support at like 15.25. So I'm going to lower the stop loss because you are showing classic bullish divergence. It was a 3% stop loss on the trade, which is way too tight. And you still get a 4 reward to risk if you lower the stop loss to just 6%. So let me re-optimize that trade. I'll try to remember to alert the Discord, but if you're in the stream, you got the heads up first. I just think I was a little bit way too tight with that stop loss given the current volatility. Palantir, same thing, stop hunted, but that actually kind of helped because it turned into a bullish pin bar candle. Back at the entry pretty much, hidden bullish divergence is confirmed on the 4-hour. Not sure where the daily MACD is not loading. But potential, if you exclude the scam wick, still potential hidden bullish divergence if you just ignore what happened on this wick right here, which who knows. And then Fisker, there's a short-term trade on it. This one actually really got stopped out. Like if you hadn't already, you definitely got stopped out. Probably no question about it. But again, it went over to reclaim support. So maybe just wait if you're not too comfortable and you got stopped out. It definitely could fall back under. It's only right over it by about 40 cents. And you're not showing divergence on your 4-hour and daily yet. That's why, you're hoping the 1-hour can help you there. You're just really trying to hold this $20.93 support on Fisker. You're showing hidden bullish divergence, which is almost confirmed on the 1 hour. But again, I feel like cost averaging could be optimal here, or just waiting until the higher time frames show. Please don't be spamming about like tickers. Like I get it, like you really like a stock, but you don't need to be in here spamming about it. I've been seeing this JCS or whatever the whole entire stream. It just makes me want to not look at it when somebody's, you know, spamming it so many different times, you know. But it's just out of respect, you know. I'm trying to run the stream, and whenever there's just one person talking about one thing, it kind of doesn't give everybody else in the chat an opportunity to voice whatever they want to voice. So that's just, please stop spamming about that ticker. So hidden bullish divergence on the 1 hour. See if it works out. And then big commerce, you guessed it, another one that got stepped out with all the volatility. But it turned into a bullish pin bar candle, and you are showing no divergence on the daily now. You needed to really hold that low. If you ignore these scam wicks, maybe, but regardless, even if it's not hidden bullish divergence, at least you can get local divergence where the price is going down with the MACD is going up. So yeah, see what happens there. And yeah, that's big commerce. I think that's pretty much all of the, you know, the trades that are going into the week from last week. Now I have 5 more stocks that I was scanning for like an hour today. I probably looked through like 200 tickers. It's pretty easy for me to just look at a chart and within like 5 to 10 seconds know that I don't want to trade it, because a lot of charts, like the second I look at it, it's either just a crazy line up or a crazy line down, or it's super gappy and just weird. So, you know, whenever you're scanning, which is what I did for like an hour today, you just can skip charts very, very quickly because you're only looking for quality, and you could probably tell right away on most charts if they're not really tradable. So I went through a bunch of different charts today, and I found 5 that are on the watch list. Not official trades yet, but they're showing potential areas of reversals to the upside. A lot of them still need some more development, but let me go over them. And pretty much I think all of them had bullish hammer candles, just like most stocks did in the afternoon, which is good. So this is Space, had a bullish pin bar candle. Space really did dump. You know, it went from $63 down to $24 at one point on Friday. Combination of a bunch of things. Just this whole entire move up here was very catalyst directed, with I believe it was Cathie Wood and ARK being bullish on Space. But then a lot of these news catalyst moves tend to sell off very, very quickly, or like hype moves and squeezes, they tend to sell off pretty much all the way back down. And the reason for that is because after you get that move and all the hype is done, what are you working with then? You know, people already bought it because of the news. The news, everybody already knows the news. So now it's like, that was a thing in the past now. Same thing happened on Rocket, right? Super crazy hype with Reddit and stuff, and went all the way up, but then it pretty much came most of the way back down, because after the hype is gone around the reason why people were buying it and pumping it up, they just take their profits. Very natural thing, happens especially in crypto, and that's just what it is. So I was looking at Space, and you might want to just wait for some more development, you know, higher lows and higher highs, like trend shift, but you do have some potential, and even you probably want to wait for some daily divergence. That's why I'm not putting it out yet. You need a few more things to really just help confirm some lows. But fundamentally, I feel like some long-term investors might be liking it here, which could send it up. You had a bullish pin bar candle, and if we look on the 4 hour, you could be developing hidden bullish divergence as long as you stay above $23. So again, scaling in could work here. You even bounced off of the 200-day moving average, and you bounced off of the high from October 20th. So we'll see what happens there. And yeah, that Space probably needs some more work, I'm not gonna lie, but it definitely isn't an area where you could see a reversal pretty easily, as long as the market holds up. Next one is XPEV. It's pretty close to bullish butterfly. Everything's pretty textbook, except you want X to be a 0.786 retrace. This is a little bit under that. I mean, over that. That's a 0.831. Just a little bit extended. It's not too much. I don't think it matters that much. But yeah, you're showing a bullish butterfly, showing classic bullish divergence developing on the daily time frame. You're showing a high volume signature at this support, and you're also showing some potential classic bullish divergence on the daily. So Divergence on the 4-hour and daily is starting to develop. You have a bullish hammer candle at the PCZ of a bullish butterfly. Looks pretty interesting, pretty good looking chart. And then after I charted all of this, I realized, and again, none of these trades I'm showing you right now are official. Space was not official yet. XPV is not official. Like these ones I'm doing right now, they're just on the watch list for the week. I haven't alerted them yet, but what's it called? The issue, it's not like an issue, it actually could help it out, but it kind of just makes it a 50-50 for tomorrow, is that earnings are tomorrow. Earnings can always go either way. Either it's actually going to help this play out, or it's going to just dump it under the support. So I'd rather miss out on a trade than get in on earnings and what's it called, and risk a pretty big amount if they don't make it. But who knows, it's already been going down in price, so maybe some things are already priced in. It's just, there's just so much questions that become involved with earnings. And again, that just overrides the technicals. So why are you playing technicals when there's earnings? You're supposed to be playing technicals when you're in a stable market, and all you're doing is charting the supply and demand, and you're visualizing the psychology of traders. Well, traders are going to be trading the stock differently on earnings today. So that's why for most technical traders, they don't really trade on earnings. They just kind of wait till it's over, or wait for periods when you're not close to earnings. Yeah, we went over TNK. We went over all the trades going into the week that were carried over. So that's Space and XPV. So the recap with Space is it looks good, but it might need some more work. The recap with XPV is it looks amazing, but they have earnings tomorrow. Next one is FUV. This one bounced off of the low from over here on Friday. You're showing some hidden bullish divergence developing on the MACD and the RSI on the daily. You're showing some classic bullish divergence developing on the 4-hour on the MACD and RSI. So you have both bullish divergences on the MACD and RSI on the 4-hour and on the daily. A lot of divergence, which is implying a reversal of the short-term downtrend and a continuation of the long-term uptrend. As long as you're above 1250, you're good, but you're quite above that, so you might want to be waiting for a dip. Might be a little bit hard since you did have a bullish pin bar candle, which could be a reversal candle. So there probably was a better entry on Friday, but it would have been a little bit harder to spot. So again, just give it some time. Maybe it does give you a better entry. That's why I put the entry a little bit lower than the current price. Like the lower you can get it to 1247, the better. So on a lot of these trades, and in general with this volatility, scaling into trades really does help, because it's going to be a little bit, not going to be a lot harder. It is going to be a lot harder to spot the exact bottom, which is, I'm a reversal swing trader. That's what I try to do. I use multiple indicators to try and see where something that's going down can start going back up, right? Buy low, sell high with technicals. Then MBIO. Very, very nice looking bullish pin bar candle off of the support. Went under, but it closed over. Hidden bullish divergence starting to develop on the daily on the MACD and RSI. And then triple classic bullish divergence on the 4-hour MACD. So very similar to the previous one. You had a hammer off of a support. You have 4-hour classic bullish divergence, and then you have daily hidden bullish divergence. FUV and MBIO, very, very similar trades. So those are 4 trades that I'm looking at going into the week, potentially. Gotta wait for some confirmation and see how the market opens tomorrow with everything going on. And then the final one is Regeneron. And the real story here is if you really scroll out and go on the daily, you see this 440 level, which was your bottom, I think on Thursday. That was a major resistance, right? So you're looking at the context. You always want to go back in history and see what's happening at a price level on a chart. You want to see where the buyers and sellers are confirming levels and showing demand, especially on for your supports, right? And this 440 level was supply, or your resistance, for literally from 2016 to 2020. For 4 years, 440 was your resistance. Of course, when you broke above it, you had a very, very nice rally. But other than this one time in 2017, you never were really able to break above it. And what you're hoping for now is, instead of that being your resistance, you get the support resistance flip. And now 440 can be your support on Regeneron. You're also showing some classic bullish divergence on the daily, which is nearly confirmed. Very close to being confirmed. I think there was divergence on the 4-hour, just a little bit of local divergence on this island. Not textbook, but the price was going down and the MACD was going up. But yeah, just another one. You might want to be waiting for a little bit of a dip. Like on a lot of these trades, they rallied very, very hard with the market on Friday afternoon. So the issue with that is technically you're already pretty high above your support. So you do have, 5% room down just to get to your support on a lot of these trades. So You might want to try and wait and hope that they come back down to the supports, maybe double bottom. That would really strengthen the argument on most of the trades I just showed you. Double bottoming would be awesome. But the reason why I'm thinking you might not do that is because you printed these bullish hammer candles and bullish pin bars. That's why I'm not actually alerting any of these trades yet. I want to see how the market opens tomorrow. I want to see if they can get closer to their supports. Just want to get some more confirmation on the trades. They're just ideas for now. You know, putting them in my back pocket. If I ever need to pull them out, play the cards, they're there for me. That's what we want to be doing every single weekend. Having enough trades, you know, pretty much anywhere between 5 to 10 trades just going into the week, even before the week even starts, so that you have any just potential things you can trade. Futures are red again. Not good. They're barely red, so it's not like they're like dumping or anything, but they started off green. They were up like 0.80%, and they came to fill the gap. They bounced again, but now they're just selling off lower than the gap fill. So we're almost at the lows on futures right now, unfortunately. Just how it is. And yeah, that's really my coverage going into the week. That's my thoughts on the market. That's my thoughts on Bitcoin, on the ongoing trades from last week, on some potential new trades. Hopefully all of that coverage helped you out in some sort of way. I also talked about you know, how to manage your risk, the mindset you need to have trading here. So hopefully the first 48 minutes of the stream was helpful. If you did enjoy it and all of that coverage, make sure to hit that like button. Let's get to 50 likes. Make sure to hit that subscribe button. Let me see how many subscribers we're at. We still need 6 more. So if you're not subscribed, we only need 6 people in here to subscribe. It's free. And you get to watch this analysis every single night if you choose to do so. Just hit that subscribe button. We're very close to 2,300. And if you want to send me a tip or get some merchandise, that's the pinned comment in the chat and the first link in the description. Yeah, I'm a little bit out of breath after talking for 48 minutes. And I was talking a lot today. I did 3 one-on-one classes today, so I've been talking for like 4 hours collectively. Not today, like a quarter of my day. Well, technically since I woke up, like half my day. How do you feel about buying shares before earnings, even if you know financials outlook are 100%? You can never know anything 100% in trading. You can know a 95%, you just can never know 100%. So, as a swing trader, I don't play earnings. As an investor, I play earnings. If I like the company and I think that they could have good earnings. When I'm swing trading, which is 99% of my trades, and it's not, you know, a long-term trade in my retirement account, I typically just wait until earnings are done. Again, I don't care if I miss out on something going up. There's thousands of other things I can find that can go up as well. I'd rather be safe and not lose because they miss earnings or people don't react to earnings. Because even the last few weeks, we've been seeing companies crushing earnings and then the price dumps. So it's just everything is on the table with earnings, and I don't like uncertainty. There never is true certainty in trading, but I at least like having a probability and something I can manage my risk off of. Can you monitor the movement futures outside of market hours? Yes, that's what I'm doing right now. Just look up futures tickers on Google and you can see a bunch of futures. Thoughts on Elliott wave theory? No, I don't use Elliott wave theory. Honestly, it's just not my cup of tea. You know, you need multiple pivots, and of course, it is definitely proven at a certain degree, just like every other technical indicator. It works sometimes, doesn't work other times. No technical indicator is a cheat code to the market. It's all just probability. It's all just what you prefer, what works best for you. I haven't even really tried it out, if I'm being honest. So maybe one day I will. But my system currently that I pretty much learned from Mitch Ray works out very, very well. So it's not off the table. I'm not hating on it. Absolutely not. I hope people don't hate on the technicals that I use, right? It's just preference at the end of the day. Same thing with what someone else was talking about. I don't do like the pump and dump stocks. It's just not my. I don't criticize people that do. I just have my own way of trading. I stay in my zone. I don't have FOMO. This is really a stream for people who want to have risk management, want to use probability, and safely and consistently build up their account portfolios, regardless of the actual market conditions. But yeah, I'm not really here to, and I'm saying this completely straightforward, I'm not here to please every single person. I'm here to help out people who want to do what I do. And of course, I show different styles of trading, right? I've showed long-term trades. risker. I've showed day trades. I put out many day trade alerts, and I've also most of the time show swing trades, which is my expertise, right? I don't want to be really speaking on things that I don't do, right? Such as high volatility trading. I just don't do that much. So it doesn't make sense for me to be talking about it and trying to educate it because I don't have the experience. What I do have the experience in is swing trading, right? Yeah, I mean, I'd rather, if you just look at it, making 10%, 10 days in a row just compounds, right? Because every single time you make that 10%, you're increasing your capital size. So now your 10% would be at a higher dollar amount. So you're compounding. Compounding over time works better than having one successful trade that's a huge winner. Of course, the timing is much, much different. And there are certain trades I put out that have gone insane, but most of them are between 10 to 20% profits, and they take a couple weeks, right? That's just, it's easier to manage risk, in my opinion, that way, but to each their own. And honestly, I wasn't really planning on doing, that much of ticker requests tonight for two different reasons. One, there was a lot to cover for the market, which I just did for almost an hour. Two, I already talked for like 3 hours today, so I am a little bit tired and I want to have energy going into the week. I don't want to be exhausted going into the week. So what else was I going to say? Oh, and also, like, who knows how the market opens tomorrow? I can look at charts tomorrow, but if the market gaps down, the technicals don't matter. So I just want to wait till the market opens to really be looking all over the place. I found 5 potential trades. If the market is stable, I can put them out. Or if the market's not stable, then I'll just forget I ever even charted them, right? That's the whole entire point of, and futures are really starting to fall now. They're down 1/3%. They just went up. They were just up 1/3%. Now futures are down 1/3%. Am I not tempted to get some of those gains? Because I got enough gains doing what I'm doing, I never like flexing percentage gains. I've done it very, very rarely, but I just don't like flexing gains, right? I don't care if people think I don't make gains. I've shared screenshots a couple times before on Twitter. I could say I was up 1,000% year to date just a couple weeks ago. I'm no longer up 1,000% year to date. I wish I was. It's under that right now, but I've proven it to myself. I don't need to prove it to anybody else. That's why I don't sit here showing my account value and my percentage gains, because when I was starting off as a trader, I didn't want to see people bragging about where they were. I just wanted to put in the work, do what I had to do, and give myself my own journey as a trader. Everybody has their own journey as a trader. Just because I was up 1,000% doesn't mean it's bad for you to be up 50%. If you're beating the S&P 500, you're technically winning. And average results on the S&P 500 are under 10% a year. So, I want people to get more value from the education and them actually applying all of these things for themselves than me just trying to, go for easy hype stocks that can leave a lot of people holding bags. I don't want my followers to be holding bags. So yeah. Hopefully that answers all the questions in the chat. Futures still falling a little bit. Bitcoin also falling a little bit. And also, just to finish off that point, I trade options, so I don't need to be looking for stocks that are, going up and down 100%. I trade options, so, these swing trades are, if I play them with options, a lot of them are 300 to 400% gains if they're correct and they work out. And quite frankly, that's a major reason for why I was up 1,000% year to date, because of options, right? If I was trading common shares, it would not be 1,000% year to date. So I do also trade higher volatility things, which are options, but I trade them based off of the swing trade idea, which is consistent and I can manage my risk. So it's just my own style, right? We need 3 more likes to hit 50 likes. Let's go. Come on. We got 3. We definitely have multiple people in here who have not hit that like button. So if that's you, give it a shot. Try out the like button. It definitely will feel good. I promise you it. Just try it out. You're going to feel like a sensation. Hitting the like button feels awesome. It doesn't even make me any money at all. It just helps to, I think it helps to grow the stream. It might not do anything. Whatever. It makes me feel better seeing more likes. Okay? I'm sorry. I'm so greedy about asking you to hit a button. So yeah. Futures, I think they're at session lows. Almost. They just were not good. They started off great, then they kind of were flat, and now they're down. So yeah, if we get a true bear market, I'm gonna put more time into putting out short trades. Definitely. That's something I've been considering for the last week. Obviously, I can't be only putting out long trades when you're in a bear market. So yes, there will be a shift to short trades if the market does confirm lower levels and it stays there. Oh, but you also, are you confident in style? Yeah. I mean, technicals work both ways. It's the same exact thing, but it's the opposite, if that makes sense. That probably sounds so weird, but you're pretty much flipping it, right? You're using your resistances as your entries and your supports as your take profits, because you're shorting it. You're trying to get in at an area where people could be selling it, and you're trying to take profit at an area when people are buying it, right? It's the same exact process, but you just flip it. And instead of looking for bullish divergence, you're going to be looking for bearish divergence. Instead of looking for bullish harmonics, you're going to be looking for bearish harmonics, right? Every single technical, well, most technicals have an opposite and equal reaction. Okay, I forgot which genius said that. Was it Newton who said? Yeah, it was one of Newton's laws, right? See, I know something outside of trading. Yeah, you're gonna need a brokerage that allows you to short. If I put out short trades, if you want to play puts, I'm probably not gonna be putting out put trades. Like, I'm not gonna be telling you what options to get, but if you choose to do that, that's your choice. How do you manage risk to the downside with options? Options risk management is a very, very complicated thing, and there's 100 different ways to do it. The way I personally manage risk, and I'm just going to say this extremely briefly because I have yet to really talk too much about options on the stream. I just try to keep it to swing trading, which is my strongest suit. But the way I manage risk on options is the same exact way I manage risk on trades. If you break the support and go a little bit under, I stop out of my options, right? I'm using my options to leverage my ideas on my swing trades more than anything else. So if you break the support on the swing trade and it's at the stop level on the swing trade, I get out of my options. Now, if that's a 5% stop loss on the swing trade, I could be down 30% on the options. My counterbalance to that is my position size. I have a lower position size for the option because I understand that I could be down 30%. So I have a lower position size than my actual common share position size. Because having like a percentage-based stop loss on options is very, very tricky because of their volatility. And you can easily get stopped out. Captain Ace, press the like button. All of a sudden, Captain Ace is 6'4", grew 4 inches. That's what happens. Great things happen when you hit the like button. So yeah, all the technicals work both ways. And you can read the encyclopedia of chart patterns. You can read, all the candlestick patterns. These technicals were researched for decades, and they were researched to work in both ways. So it's not even me trying to prove anything. It's all the people who put in the research for 30 years, proving their studies. Futures bouncing finally a little bit. We're just watching live futures at this point, I guess. Yeah. I don't know. I don't want to go too crazy. I feel like everybody should relax a little bit going into the week. It's like last week, it's going to be a little bit stressful, but hopefully manage risk. Yeah, we'll see how the market opens tomorrow. Again, apologies for not doing ticker requests tonight, but I already explained the reasonings behind that. I'm just a little bit tired. I've been charting for probably 5 hours today, and the market's not even open because I've been doing the classes and I've been scanning, and now I'm streaming. So I don't want to be tired of charting before the market even opens. So I want to keep that energy flowing and just relax a little bit. Let's talk to you guys. And also, the market could literally open in any sort of way tomorrow. So even if I look at a chart for you, what probably matters more is how the market opens, and I have no clue yet. We're also in the middle of a range, so I don't even have a clue on the indexes until the market opens. Hard stops or mental stops? Great question. I've been talking about this in my one-on-one classes, and this is something I learned from True Trading Group watching them. If you are an emotional trader and you're having issues committing to your stop loss when you get there, I would say have a hard stop. What you're kind of sacrificing to have a hard stop is you can get stop hunted, your order will fill and the price can go back up if it's like a fake out. And if you are not an emotional trader and you actually can commit to your stop loss, I would say to have a mental stop. Obviously, always plan your stop level before you enter the trade. But if you're not an emotional trader, you can just not put in an order and just set an alert at your stop loss price, right? Set your alert on whatever platform you have that gives you alerts. And when it gets there, you can just watch the price to see if it's actually falling under the support or if it can get right back over it and close the candle there. So it depends on if you're emotional or not. So yeah. But personally for me, I started out with physical stop orders. I no longer use physical stop orders. I just use alerts on TradingView, and if it hits my stop loss alert, then I go look at the chart and see what's going on, if I need to get out of the trade or not. Futures bouncing a little bit, pretty much still flat at the end. Actually, we're down 1/3%, now they're only down like 0.15, so. Classes. I'm doing the one-on-one classes, college classes, trading myself, and streaming, and it's awesome. Gojo, that's how you pronounce it. It's not too complicated, I think. With the $20 donation, appreciate all you do. Get some sleep. Appreciate the $20. Thank you very much, Gojo. That's how you pronounce it. I assume it is, right? I don't know. Maybe I'm wrong. Sorry. But appreciate it, and thank you for the 20. If you want to learn about fibs, if you go to the free course on my channel, just click on my channel, then go to playlists. When you click on my channel, then when you get to the playlist, go to free trading course. I believe course video number 4 is a tutorial on Fibonacci. Yeah, I use the 4-hour candle for confirmation. But again, when you're doing that, you're kind of sacrificing, potentially 4 hours, right? Because in those 4 hours, a lot can happen. That's why you need to be watching the price. You still need to, just because I'm saying wait for confirmation does not mean that if the price goes down 10%, you shouldn't be stopping out. It's just what I mean by that, and just to kind of clarify, what I was kind of talking about here, example, not on that trade. What I was talking about right here is, and this is really not an easy answer. There are so many things involved with it, such as the short term, the low time frame technicals, and then also what the indexes are looking like. Those also matter for if you should be stopping out of a trade or not. Because just because your price is moving, there's a lot of reasons for why your price is moving. Is your price simply moving on a random Tuesday and the market's stable? Then maybe you should definitely be stopping out. But is the market being super volatile and down 3%? And the markets and the indexes are out of support, then maybe you're only breaking your stop loss not because your trade idea was wrong, just because the market's falling. And that's kind of what happened on Friday. So yeah, when I'm talking about the 4-hour candles, what I'm really saying is, yes, you fell under support, but you never closed that candle. There has to be, and this is, again, these are more complicated things that I really only kind of go over in the one-on-one classes. But okay, 2 stop levels. Imagine that, right? How do I put this? You have your first stop level, which was your original stop for the trade. Now, if you actually get down to that stop level, create a very short-term stop loss. Now, what do I mean by that? Okay, you're in a trade. It comes down to the stop level, okay? The candle's not closed yet. You're on the 4-hour chart. Then when you're at this stop level, you kind of create a very short-term stop level. What do I mean by that? Okay, I'm going to change my color to red. Not do it yet. Let's set up another box. Okay, you're at the stop loss, and you want to see if you're going to be getting stop hunted or not. Okay, so what you do is you place another box under that area as your short-term stop loss, which means if by the time that this candle closes, if you go to my secondary stop loss, right, it's a drawing tool. If you go to my secondary stop loss, then I'm actually just going to be stopping out before the candle closes, right? So the price is dropping, you're at the stop loss area, but the candle hasn't closed yet. You look for a new stop loss that's a little bit lower, but not too far lower, so that you're not losing an insane amount of money, just a little bit lower. Because really what I mean by the candle closes is not to give up 20% in losses. What I mean by that is to see if your original stop level is actually being broken or if it's being stop hunted, okay? So you're giving yourself just a little bit more room until that 4-hour candle closes to actually stop out. So really when you're at this stop level, you're waiting for the 4-hour candle to close. If it does not come down to your secondary stop loss by the time the 4-hour candle closes, then you remove your secondary stop loss. Okay. Why can't I delete this box? What's happening? Then you delete your secondary stop loss, and then your candle closed above it, then you come back to your original stop loss, right? That's more of an advanced method. And there's so many different ways to play stop losses. I have another same method for taking profits and scaling out. But again, those are things I just talk about more in the one-on-one classes. And I definitely want to add more videos to the free trading course, like more advanced videos. I want to do a video on harmonics, eventually options. Just it'll take some time. Schedule has been pretty tough. Yeah, the one-on-one classes are paused. When I did the one-on-one classes in January, it took about a week for 10 people to sign up. So I was able to spread them out. It wasn't too crazy. When I opened up the one-on-one classes last week, 22 people signed up within 24 hours. So within literally about 10 days, I'm doing 22 classes. That's 22 hours. And I also have to stream, I have to trade, I have to do college, I have to find time to relax, I have to work out, I have to eat food, I have to shower. So if I have 22 people signing up in one day, I'm blessed. I'm truly blessed. I'm so grateful for that. It's just physically I don't have the time to keep it open unless we schedule classes 3 weeks out. But what if I get even busier 3 weeks out? That's why I was telling the truth. When I opened up the classes, I was telling everybody they're not going to be open for long. So I was just waiting. Yeah, I was limiting the slots. I don't want to say the actual number because I wasn't sure if we were going to get to it, but we pretty much, my number for the amount of slots I had for the classes was 20. We got 22 classes signed up. So I just didn't want to say it on the stream because I didn't even think that we would get to it that quick. We just did. So next time I do it, I probably will say the amount of slots open. Apologies. That's why I really just try to emphasize that I'm going to be closing them soon. I didn't want to just open them and then 2 days later without saying anything, close them. That's why I was really trying to say, even on Twitter and in Discord and on stream, that they're open for a limited time only. And I meant that. And now you saw I wasn't lying, right? So hopefully once all these classes are done, if my schedule is still a little bit open for me to have 20 hours a week to do classes, I'll try and do it again. But yeah. What does filling the gap mean? So there's a theory about gaps in which if something gaps up or gaps down, there is a decent probability that gap will be filled. I'm not even too sure why. I guess it's maybe just traders have OCD. I don't know, but you can probably just research it. But I don't really care about why. It's just I know that statistically most gaps do fill. A gap up means from one candle to the next candle, you didn't even show any price there. You just went straight up to another price. So yeah, usually when you do that, and I'm not talking about on the 5-minute, I'm talking about if you do that on the daily, usually you fill them, but not always. I mean, we can go look for gaps that never filled on the S&P, sure. Let's see. Actually, most of them did kind of fill. Well, we can look at the NASDAQ. There was a gap. Yeah, if we look at the NASDAQ, you see we're on the daily time frame. From December 11th to December 12th, it did gap up from this candle to this one. And then finally, it took 2 months, and then you finally came down to almost, you didn't even technically fill the gap. You were inches, cents, dollars away. I don't know. Watch people resell the slots. How do gaps form? Extreme volume? Yeah, pretty much. From what I understand. I think you're right. Again, on a lot of these technicals indicators, I don't care too much about why it is. I just care about the statistic of it working or not working. And for gaps, a lot of times they do work. So yeah, I feel like I spent a little bit more time than usual just talking to the chat tonight. Hopefully that helped answer a lot of questions, because I feel like during the week, I'm just charts after charts after charts is what the stream consists of. Since the market wasn't even open today, we can just spend more time getting everybody mentally prepared for the week, answering some questions, and yeah, hopefully all those talks helped tonight. Have a good one, Captain Ace. Appreciate it. yeah, I think I'm also gonna head out right now. Still got 40 people in here. Thank you all for coming out. If you want to send me a tip or get some merchandise, it's the pinned comment in the chat and the first link in the description. Otherwise, good luck trading this week, and I'll see you tomorrow night at 9 p.m. EST. I hope you like the new stream overlay. It looks all right. You can keep it for a little bit, maybe like a month or so. I think it's just a lot easier to see my trading view with this stream overlay compared to the last one. So yeah, it is what it is. Thank you everybody for coming out tonight, and see you tomorrow. Peace out.